36%. On money you never touched. On gains you never realized. On a number that exists only on a screen. The Netherlands looked at every retail investor in the country and said, "You owe us money. Not on what you sold. Not on what you made. On what your account says right now. Tonight. Before you've done anything." But before we get to government-mandated financial destruction, let's talk about the war that started all of this. Because March 2026 was a special kind of chaos. And 5 different traders, in 5 very different ways, got absolutely cooked by it. There is a certain kind of madness that only emerges when geopolitics meets a leveraged options account at 2 in the morning. When a war breaks out and the first thing you think is not, are people okay? But, what are futures doing? That is the Iran war volatility trade. The geopolitical shock play. The "I have done my research and my research is that bombs equal put" strategy. And in March 2026, when the US started military operations against Iran, the entire market held its breath. Some traders held their positions. Some traders held their tears. And one country held your unrealized gains hostage. 5 stories. 1 war. And a masterclass in how external shocks expose exactly who you really are as an investor. Let's start with something almost reasonable. Almost. Trade 1. March 4th, 2026. Futures open down. The S&P 500 is sitting right at support. 6,700. A number that has held for 4 months. And one man on Reddit is watching the futures tick and asking the most important question in all of finance. Will it hold? Now look. On the surface, this is a completely normal thing to post. Futures are down. Iran war just kicked off. Guy is watching the technicals. Totally sane. Totally rational. And then the comments happened. 802 upvotes. This scream open red. Close green. That's it. That's the whole analysis. No charts. No Fed model. No geopolitical risk framework. Just vibes. Beautiful, degenerate vibes. Let me explain why this comment is simultaneously the dumbest and most accurate thing ever posted on a finance subreddit. The open red, close green phenomenon is real. It has a name. It is called a gap fade. When news hits overnight, the market opens down, panic sellers dump everything at open, smart money buys the dip at 9:31, and by 2 p.m. the whole thing reverses. It happens constantly, and the people who know it happens are the ones who don't panic sell at the open. And then there's this guy. 196 upvotes for brother. The government literally telegraphed this for weeks. And he is correct. This is the dirty secret of geopolitical trading. By the time the war is on CNN, the market has already priced it in. The real money was made last Tuesday when some guy in a hedge fund read a State Department briefing and bought puts. You and I are always last. The remaining comments are equally enlightening. Quote, "Oh new minus 0.9%. Anyway, another, classic boot and rally. Futures are only down 1%. And my personal favorite. That means we going green tomorrow." The last guy said it with such confidence. Such certainty. Like he had insider information. He did not have insider information. The lesson from Trade 1 is simple. When war breaks out and futures open down 1%, the internet will immediately split into 2 camps. Camp A, open red close green, buy the dip, priced in. Camp B, bloodbath incoming, the world is ending. Both camps will be wrong by noon. The market does not care about your thesis. But that was just the domestic market. The Iran war was not staying domestic. Because while Americans were debating whether minus 1% was really that bad, something was happening on the other side of the world that was considerably more concerning. The Korean stock market was in freefall. And the number you need to understand before we get there is 150%. Trade 2. The Kospi, the Korean stock market, had run up 150% in the past year. 150, while the S&P was up 16. The American market, the reserve currency of the world, the market every other market follows, was up 16%. Korea was up 150. And now the Iran war just lit the fuse. Here is what you need to understand about parabolic moves. And I say this as someone who has ridden a few of them to the moon and then back to the basement. When a market goes up 150% in a year, it is not because the economy got 150% better. It is because money flooded in, leverage built up, and everyone assumed the guy behind them would keep buying. It's a game of musical chairs. And the Iran war just pulled the plug on the music. The Reddit post asks, What would be the alpha here? And I respect the hustle. The market is crashing. Korea is bleeding out. And this man's first instinct is, how do I make money off this? True degenerate energy. The comments did not disappoint. 218 upvotes for bloodbath on MU and SOXX tomorrow. And this is actually smart. Korea's economy is deeply tied to semiconductors. Samsung, SK Hynix. If Korean markets crash, semiconductor supply chains get spooked. Micron goes down. The semiconductor ETF goes down. This is real macro thinking. From a Reddit comment, written at whatever ungodly hour Korean futures were trading. And then someone drops the real truth bomb. 177 upvotes. Are people forgetting the Kospi was acting like a meme stock? Yes, they were forgetting that. They were absolutely forgetting that. Because when you're up 150%, you don't want to hear about mean reversion. You want to hear about how you're a genius. Until the Iran war starts and you're suddenly liquidating at 3 a.m. to cover a margin call. And then there's the yen carry trade comment. 55 upvotes. They are just blaming the Iran war. Rumors has it margin calls went out and they are forced to close yen carry trade. This is the comment that tells you there are actual adults in this subreddit. The yen carry trade is one of the most dangerous liquidity mechanisms in global finance. When it unwinds, everything goes down at once. Iran war or no Iran war. The takeaway from trade 2. When a market runs up 150% on pure momentum and then a geopolitical shock hits, it is not the shock that kills you. The shock just provides the excuse. The real killer was always the leverage. The real killer was always the guy who bought in at the top thinking the music would never stop. The Iran war just pulled the chairs away. Now, we've talked about watching futures. We've talked about international contagion. But our next trader was not watching. He was acting. He had already made $35,000 on puts. And instead of closing the app and going to sleep, he decided to add 60 more contracts. Overnight, during a war. Because why not? Trade 3. WallStreetBets. Flare, gain. The title, Overnight Puts Until This Thing Is Over. And the post body contains one of the most dangerous phrases in retail trading. Quote, playing with house money now. Let me tell you about house money, because this is maybe the most psychologically destructive concept in all of trading. The idea is, I already made $35,000 in profit. So if I risk that $35,000 on more trades, it's not really my money. It's the house's money. I'm playing with winnings. Here is why that is complete and total brain rot. That $35,000 is your money. The moment you could have withdrawn it, it became your money. The house does not exist. You are the house, and you are about to burn it down. The actual position, 6676 puts expiring March 4th, plus 20 contracts for the 5th and 6th. He is all in on continued downside. He needs the market to keep dropping, and the comments immediately start the clock on his doom. 609 upvotes for, I got overnight calls. One of us will be right. The guy bet the exact opposite. Which, statistically, is just as valid a strategy as anything this man did with his options chain. 203 upvotes. By the way, house money isn't a real thing. It's all your money if you withdraw it. Someone in the comments went to therapy and came back to help. Beautiful. And before you ask, no, the original poster did not listen. And then, the comment that should have stopped him. 144 upvotes. This is a great idea until we get a taco overnight saying the war is over, and we jump 3% instantly. Taco. Trump announcement causing optimism. A real term, used unironically, in a discussion about whether to hold overnight puts during an active war. This is the world we live in. 29 upvotes. You just inversed it from posting, nice job. The inverse WSB indicator is real, it is documented, and it has claimed more victims than any single trade strategy one can name. The moment you post your position on Reddit, the market reads it and does the opposite. This is not superstition. This is pattern recognition. If you're watching this and thinking about holding overnight options during a geopolitical event based on your read of the situation, don't. Stop. Close the app. The market does not know about your analysis. It does not care about your analysis. It only knows about the taco. Now, trade 3 was stressful, but nobody confirmed they lost money. They might have been fine. Probably weren't, but might have been. Trade 4, however, is a gain post. A real, documented, actual gain. $8,000 turned into $63,000 in a single day on a 0 DTE options trade during the Iran war sell-off, and you're going to feel great about it for exactly 30 seconds. Trade 4. WallStreetBets. Flare, gain. Title, turned 8K into 63K. Smiley face. This absolute degenerate made 750% on a 0 DTE options trade during one of the most volatile market days of the year. And he posted it with a smiley face. I feel nothing but respect and existential dread. Here are the actual brokerage screenshots. Look at this. Look at it. 0 DTE options. Let me explain why these are the financial equivalent of playing Russian roulette, except the gun has 5 bullets and you're doing it for fun. A 0 DTE option expires the same day you buy it. It has no time value. It is a pure directional bet. If the market moves your way by enough in the next few hours, you win enormous. If it doesn't, you lose everything. Not most of it. Everything. It is the closest thing to a casino slot machine that the SEC has not yet banned. Yet, the comments on this post are a masterpiece of the human condition. 275 upvotes. Do it again. That's it. Do it again. The most succinct expression of survivorship bias ever written. 202 upvotes. 63K to 0 would be more impressive. The community immediately recognizes what is coming. They have seen this movie. They know the ending. And then, 75 upvotes. This comment. Man, I had the same contract. Bought it for $6.20, sold at $8.30. Then 20 minutes later, it was at $14.20. Then it mooned at 2:30 p.m. at $36.20. This man sold a contract at $8.30. It went to $36.20. He left 70% of the gains on the table. And he is sharing this information publicly, on the internet, where people can see it. And then the comment that breaks my soul. 67 upvotes. I turned $100 into 8K in 2 weeks. Now my account is back to 0. So eventually OP will blow. 0 chance to be successful long-term with 0 DTE. This man turned $100 into $8,000. A life-changing run. And then gave it all back. And he is in the comments of someone else's gain post as a warning. Profit. A cautionary tale in human form. We've all been there. Maybe not from 100 to 8,000. But we've all had the trade that worked. That worked so well we thought we understood something. And then we traded again on that confidence. And the market reminded us that confidence and skill are not the same thing. The second portfolio screenshot tells the full story. The last comment. Now turn 60K into 480K. Easy. And honestly, that's the game, isn't it? One more trade. Just one more. Bigger this time. We're playing with house money. We've been here before. We know how this ends. But we can't stop watching. Okay. We have talked about futures. We have talked about Korean markets crashing. We have talked about overnight puts and 0 DTE casino tickets. All of that, all of it, was preparation for Trade 5, because Trade 5 is not about a trader. Trade 5 is about a government, and what happens when a government decides that your unrealized gains are their realized revenue. Trade 5, the Netherlands, March 2026. While the Iran war was rattling markets globally, the Dutch government decided this was the perfect moment to introduce a 36% tax on unrealized capital gains. Not realized. Not when you sell. On the number your portfolio shows. Right now. Tonight. Before you've done anything. Let me walk you through the actual math because I need you to feel this. You put $50,000 into stocks. They grow to $100,000. You have not sold. You have not touched the money. You are just sitting there holding, being a good long-term investor, doing exactly what every financial advisor tells you to do. And the Dutch government sends you a bill for $18,000. Do now, in cash, which you don't have, because your money is in stocks that you haven't sold. So now you have to sell stocks to pay the tax on the stocks you didn't sell. And then you pay tax on the stocks you sold to pay the tax. This is not a thought experiment. This passed a vote. 1,666 upvotes for the top comment. Not a lot of thinking in the first place. The most efficient possible response. They didn't even finish the sentence. The sentence finished itself. 798 upvotes for the most important comment in the entire thread. The most insidious part is that it can be avoided by incorporating your capital gains. Wealthy people can dodge most of the tax by setting up companies. Middle-class people won't be able to. It's basically a way to prevent the middle class from building wealth through investing. Read that again. The people who designed this tax created a tax that the rich can legally avoid, and the middle class cannot, and they called it a wealth tax. And here is the comment that confirms it. 798 upvotes. The wealthy incorporate. The middle class pays. That is the entire story of this tax in one sentence. 422 upvotes. Nothing better than the government taxing you and forcing you to take an action triggering another taxable event. Edit. Apparently they skipped the first step and don't even tax realized gains. I cannot comprehend the logic here. The edit is doing a lot of work. This person started writing the comment angry about the tax on unrealized gains. Did research mid-comment. Found out the Netherlands doesn't even have a normal capital gains tax on realized profits. And came back to report that they cannot comprehend this with their human brain. Valid. 212 upvotes. What idiot came up with this? Fair question. Criminally underrated question. 2,900 upvotes on the post. The most engaged thread in our entire lineup today. Because nothing unites retail investors across the world faster than a government trying to tax their portfolio before they've made a cent. 106 upvotes for the comment that broke me. If I buy a stock for $5 and tomorrow it's $10, it's not because it grew. It's because the last shares that were recorded sold were sold at 10. And I have to pay tax because the last person that purchased a share bought at 10? LOL. This person just independently invented mark-to-market accounting critique. In a Reddit comment, with a LOL at the end. Academics have written entire papers about this exact problem. This person solved it in 2 sentences and then wrote LOL. 124 upvotes for the comment that puts the whole thing in perspective. I see people suggest this all the time to solve billionaires who never sell stock and never pay taxes. It's so obvious this is a terrible idea and would certainly hurt retail more than anyone. And there it is. The unrealized gains tax was always sold as a billionaire tax. Jeff Bezos never sells Amazon stock, so he never pays capital gains. Tax the unrealized gains, you fix that problem. Except you don't. Because Jeff Bezos has 16 lawyers and a holding company in Luxembourg. You have a Robinhood account and a dream. And here is that comment in full because it deserves to be read. The Netherlands, forced to rethink. The backlash was so massive, so immediate, so international, that they had to walk it back. Because it turns out that when you tell millions of middle-class investors that the government will tax their paper gains before they can even realize them, those investors get on the internet. And they are very, very loud. The title of the post says it all. Forced to rethink. Not reversed. Not apologized. Forced to rethink. As if the original thought was just a little rough around the edges. A bit of polish and it'll be fine. 36% on unrealized gains. Just needs a little rethinking. Maybe 32%. Maybe we only tax you while you sleep on Tuesdays. And that is what makes Trade 5 the craziest story of the day. Not because someone lost money on options. Not because someone held overnight puts during a war. Because a government looked at its citizens during a geopolitical crisis, while markets were already volatile from an active war, and said, you know what would be a great time to announce a tax on your unrealized gains? Now, this is the time. Let's do it now. That is a smooth brain move of historic proportions. 5 stories, 1 war, and a through line that connects all of them. External shocks reveal who you really are. Whether you're a retail trader watching futures at midnight, a Korean margin account getting liquidated, a WSB degenerate holding overnight puts on house money, a 0DTE cowboy riding volatility, or a government trying to tax paper gains during a crisis. The Iran war didn't create these situations. It just lit them up so we could all see them clearly. The lesson from Trade 1. By the time you read the news, it's already in the price. The lesson from Trade 2. 150% run-up is not a bull market. Some margin call waiting for a reason. The lesson from Trade 3. House money is your money. The house is a lie. The lesson from Trade 4. 0DTE will make you a legend or a cautionary tale. Usually both in that order. And the lesson from Trade 5. If the government ever proposes taxing your unrealized gains, move your brokerage account. And possibly your country of residence. The Iran war of March 2026 was a geopolitical shock. Markets hated it. Traders tried to trade it. Most didn't. And one government tried to use it as cover to implement a tax policy that the internet collectively destroyed in under 24 hours. The market is a mirror. It shows you exactly who you are when things get scary. And most of us, if we're being honest, look a lot like that guy refreshing futures at 2 a.m. hoping for a taco announcement. If you're watching this and thinking about making any of these trades the next time a geopolitical event hits, I'm begging you, close the app, walk away, go outside, touch some grass. The market will still be there tomorrow. Your money might not be, but the market will be there. I'm your host. I have personally made at least 3 of these 5 mistakes. Not saying which 3. Subscribe if you want to watch me document the next war's worth of financial chaos. Like if you learned something. And if you're the guy from the Netherlands who approved that tax bill, positions are banned.